with BQ Prime, and we're in conversation with CBDT Chairman Nitin Gupta. Mr. Gupta, many thanks for joining us here on BQ Prime. My attempt through this conversation, Mr. Gupta, will be to bring you some of the concerns that I have gathered over the last 24 hours from industry and stakeholders and try and get the department's perspective on that. I'll start with first a provision that seems to have baffled, or the why of it has baffled, almost everybody I've spoken with, and that's on the increase in TCS rate or tax collected at source rate for remittance transactions from 5% to 20%. Would you like to share with us why the department or the finance ministry thought it fit to increase this TCS rate?
See, the TCS rate which has been increased, it has kept everything intact for the medical and education. So
that's correct.
That remains as such. The increase in rate from 5 to 20 is limited to other payments, which are other sort of LRS, which could be on gift or maybe for investment purposes or for foreign tours, etc. So this is the first part of it, so that there is no concern about those who are putting their children for education and medical purposes. The primary reason for this is that we want to collect tax upfront wherever the investment or payment is made outside India. So that the upfront payment, whatever we are getting in the form of 20% TCS henceforth, will be adjusted against the tax liability of the person who is remitting the money. So there is nothing negative on that account. It's not an extra tax which is being collected. It is a tax which was due otherwise on the income which the person would have earned during the year. So, so I think concerns.
I take your point, Mr. Gupta, and I'll articulate the concern a little better. So the scope in terms of the transactions that were within this TCS net has of course not changed. That remains the same. Principally speaking, we have always been told by the department and the finance ministry that the reason we want to introduce TCS or TDS provisions is to track transactions, right? Now, that was anyway getting done when you had the 5% rate. So now for an investor who's, let's say, invested, and you've seen that retail investment in, let's say, stocks in US, for instance, right? Those kind of investments where now it will pose a cash flow issue for people. I take your point that that credit will be available, but again, it's a compliance headache, and also then you wait for your refunds while your cash flow is blocked.
No, I think it is exaggerated in the sense that compliance issue was there at 5% as well. It is now 20%, so that compliance burden is not at all there. Now coming to the cash flow position, the person who is investing money abroad is not a small person. Either you or I are not investing any money abroad. So the purpose of this is when a person is high net worth or he is a high value investor, definitely the adjustment on account of advance tax can be made by him, what he is paying in India. So it's not affecting even the cash flow, I believe.
Okay, all right. I'll end the sort of discussion on this point here. The second point I want to bring your attention to is what's now been sort of widely referred to as the angel tax provision, and which is section 5627B. The scope of that has now been expanded to include non-residents as well. Is it safe to assume, as my first question on this, that startups that are registered with Department for Promotion, those will not get impacted, or those investments will not get impacted even if they are being made by non-residents?
Yes, that is a separate card for them.
Right. The one issue, Mr. Gupta, that the industry has flagged off is that the Department of Promotion's recognition ends at after 10 years from the incorporation date of the startup. So as long as the end use conditions remain the same, does the department have a principal objection in extending this safe harbor to, let's say, the 11th or 12th year when the startup may get a round of funding?
We will examine at that stage when it comes, but it's a issue which you are taking up, which is more granular. So we will examine when the things come up.
But I mean, have sort of people or stakeholders approached you with this ask that as long as the end use sort of is met in terms of where the funds are flowing, the department will consider probably extending the benefit?
Not yet. We have not received any representation. We will get, I think, post budget things may come up. We will examine at that stage.
Okay. The third sort of provision, Mr. Gupta, I'd like your sort of, the logic on is this set off and withholding of refunds, and that is 241A and 245. Now, the finance bill has proposed to integrate these two sections, one that allows the department to withhold a taxpayer's refund if any assessment is pending, and the second which deals with adjustment of refunds against outstanding demand. Now, there are two issues that I have learned on this aspect. One is that why is there a stay on the demand? Why is there the department is adjusting the refund in cases where there is a stay in demand? And also, why is no opportunity being given to the taxpayer to be heard when this intimation of notice happens?
I think there were operational issues which comes first, and that is the reason we have integrated it. Wherever the stay of demand is already there, ideally, to that extent, the refund should not be withheld. And prior intimation, yes, it goes. It's mandated, so the assessee should get an intimation on account of withholding.
I think so. The intimation
of
is
refund.
going with the but I think the intimation is going. The taxpayers are not getting an opportunity to be heard before those adjustments get made.
It's an operational issue. It's not linked to the budgetary change.
No, it's not. It's not. But now I'll come to what more importantly, people are sort of aggrieved by, and that is the amendment to the existing provision to say that you won't get the additional 3% interest for the period when the refund was withheld because of some pending assessment or reassessment. Please correct me if my understanding is wrong, but can you explain the rationale for this proposal? And also, it seems a little harsh on the face of it.
We will examine it if this is people are feeling it harsh. We'll examine it.
But what was because sir, the pending assessment or reassessment can take a considerable amount of time. So to lose on that interest which you currently are entitled to, I'm just trying to understand from you what was the thought behind this?
Let us examine it. The way you are putting it up, we will examine it that way.
Okay, but was there sort of anything that you noticed in practice that prompted?
See, the time for completing the assessment is not very large now as it was earlier. So the time was reduced from 24 to 21 to 9 months now, which we have increased it to 12 months, proposed to increase to 12 months because of the faceless regime, which requires more channels of procedures to be followed. So it's not much, but the way you are putting it up, we will examine it.
Okay, I'll take that point, sir. I want to talk to you about the TDS on benefits and perquisites, and I think the finance bill is now clarifying that any benefit or perquisite in the form of cash or kind will also be now subject to 10% TDS, and I think it's more of a clarification due to some adverse, let's say, litigation or other rulings that came in the way of the department. The one issue that is getting flagged off here, Mr. Gupta, is that with regards to trade debts, that when you've not been paid for a service or goods and you've written off that amount and yet you're expected to pay this 10% TDS from your pocket, what's the department's view on this?
I think we have issued 2 circulars already on 194R.
Right.
And most of the concerns were taken care of at that stage. Since then,
I think it sort of refers to financial institutions and banks. But let's say today I'm a company and my vendor has not sort of paid me, and I'm writing off that debt in my books.
That's what I'm saying. That whatever issued had come, we had issued already 2 circulars last year. So if there is a genuine concern on that account, it can be referred to us and we will examine it and pass an appropriate instruction or circular. We have already come out with 2 circulars.
Yes, that I remember. But I think this is something that, again, the industry, some of the players in the industry brought to my notice, where trade debts are.
You may advise them to submit a presentation so that we will examine that. We are open to suggestions.
Okay. One provision again where I think some clarification is required, Mr. Gupta, is where you talk about promoting timely payments to MSMEs. Now, I think where the confusion is that you're saying that the deduction will be available only when the payment is made. That's fine. And then you refer to the MSME Act for the duration. So that's the time period provided in the MSME Act, which is 45 days. So will you get the deduction if you pay the MSME even after, let's say, 6 months, but within the financial year, or you have to pay them within the 45 days since the date of the invoice to be able to claim this deduction? Can you help clarify the language for us a bit?
I think the language of this section says, it could be a different interpretation, says that the payment will be the expenditure, corresponding expenditure will be allowed when the payment is made. So long as the payment is not made, that expenditure will not be allowed. And I think the statute permits even if the payment is made before filing of the return, I think so, there is some time limit given there too as well. So the purpose is that it doesn't elongate beyond a particular period of time.
So what is the utility of this 45 days that is being referred to in the finance bill, Mr. Gupta?
I think we have permitted. Let me check the provision because
sure, please.
Many things happen. Because this says any sum payable by the SSE to a micro or small enterprise beyond the time limit specified in section 15 of MSME Act, whatever. So this is the clause which has been inserted. So it restricts the payment to that date. And I have to see the clarificatory amendment to that. What is the position? I think if there is any confusion, it can be clarified. So the act is saying that the payment which is made within the time limit prescribed under the MSME Act will be allowed a deduction. Beyond that, if you want to make claim it as an expenditure because it is a purchase or a service or anything, it can be allowed only on actual payment basis. Till then, it is not paid, it will not be allowed as a deduction. So not to allow deduction on accrual basis if the amount is paid by due date of furnishing of the return of income in case of MSME. So it is permitting the payment in future as well, but unless it is paid, it will not be allowed as a deduction. As of now, even if you don't make the payment for 2 years, it is allowed as a deduction.
Correct. So now, so can I understand this to mean, let's say I raise the invoice on 10th of April and I pay my vendor on, let's say, Feb 2nd of next year, and which is exceeding the 45-day limit. So the deduction will be allowed?
Yes.
Okay, understood. Thanks for clarifying that, Mr. Gupta. I want to now sort of get a sense from you on what was the approach when it came to the provisions for online gaming. And it seems that the finance bill is trying to distinguish in some sense between online and offline games. Is that the intention? Because both in terms of the tax base and the withholding provisions, there seems to be a difference between how you approach online games versus offline when it comes to taxation.
Yes. Yes. Online games are at a different footing now.
Okay, and I mean, can you sort of elaborate on, I mean, where do you see, I mean, that tax position sitting today?
The proposed changes are that online games TDS will be made at the rate of 30% as it is today. But today the threshold is 10,000, the threshold is removed, and the confusion regarding whether it will be on the net basis or gross basis, it is said that it will be on net basis. Secondly, at what point in time TDS will have to be made? It has been clarified that when you withdraw money from the wallet or at the end of the year. So at either of the two stages, TDS can be made. So it's a certainty which has been provided to the platform which is offering the game. And the certainty is to the player who is playing, and it is ease of compliance at the level of the deductor, means the company which is offering the game.
Okay, so if I understand it correctly, for online games, it will be on the net winnings, and for offline games, it will be on the gross basis.
Offline games are at par with lottery and other things.
Right.
So they will be the change which is proposed is that not on each event, but the gross amount in the entire year, the threshold will be applicable for the entire year, not on each moment.
Okay, but there's just one concern in terms of implementation, Mr. Gupta, that now actually two. Now the gaming companies or intermediaries will have to ensure that users have discharged their tax liability. And second, if the intermediary is a non-resident, how do you see them abiding by the withholding obligations?
Which intermediary you're talking about?
So let's say the game that I'm playing currently as a user or resident in India, that platform is not based in India. It doesn't have a presence in India. So how
that challenge always remains in terms of taxation. That challenge always remains in terms of taxation, whether the foreign entity which is offering the game has a P in India or it doesn't have a P in India. So that challenge will always remain. But so far as the domestic entities are concerned, it's a regime has been laid down, and it's a regime which is quite different from the VDA regime. Then we have provided the player who has played the game, how the taxation will be there. A separate section has been introduced. So a lot of certainty, lot of simplicity and ease has been predicted, has been thought out for the.
And as a user, how will how will, let's say, a platform or an intermediary ensure that I, as a user, have discharged the tax liability?
No, your tax will be deducted if you have won the game, and if you withdraw money from the wallet, then tax will be deducted and net payment will be made to you.
I'm just wondering, let's say if there are sometimes when the payments or the winnings are in the form of coupons, and maybe the amount is not enough. So what happens in those cases? Are you going to issue sort of guidelines on it?
If it is in the form of non-cash thing, the same provisions will apply. Then you will have to pay the tax first, and then.
And that documentation now I'll have to submit to intermediary to sort of keep my account alive.
If you have something is there in kind, that is always.
Okay. My final question, Mr. Gupta, could you there was one statement that got made in the press briefing yesterday that there is an attempt to go after while giving concessions, let's say on the new tax regime that has been now said to be the default. There's also an attempt to go after transactions where the department or the ministry thought that there's tax avoidance, whether it is on premiums, whether it is on some of the housing related deductions that people were getting. So now threshold of 10 crore has been introduced. Could you articulate the approach of the department in going after these tax avoidance transactions?
No, it has been the constant endeavor to plug the loopholes, and we have provided benefit to the people at a higher threshold, 5 crore and above. The surcharge has been reduced to 25%. At the same time, we have plugged some loopholes like LIC thing, or what you're talking about, the residential house property capital gain benefit above 10 crores. So these are the few measures which you have taken for augmenting the revenue as well.
Okay. Well, before I let you go, Mr. Gupta, my final question is on one double non-taxation event that you've tried to address with regards to REITs and InvITs, and which the repayment of loan which was getting done from a business trust to investors. Now there's a new tax that they're getting faced. But do you see this getting there's a capital payment or an income in the hands of the investor? and hence this tax? And I mean, is it really an income that you're now seeking to tax?
Yeah, we have plugged the loophole. It has been taken benefit of by several institutions. We have plugged that loophole.
Can you give us a ballpark on, I mean, how much do you think you were losing in tax revenue because of
That's not important. That's not very important, because it's a new area which is coming up. There may be several other such REITs and InvITs, and so we have just plugged one loophole which we found during the course of execution of our work. So that's it.
And I mean, again, if you would permit me another minute, what was the thinking on market-linked debentures? These are, I think, sort of instruments that were quite popular among HNIs. I mean, why the 30%?
We are not saying don't remain popular. We have just provided a measure for taxation, how it should be taxed. So that's it, simply.
Yes, but like that sort of the attractiveness of the instrument, Mr. Gupta, of course, you would also agree. I mean, utility goes away. So I'm yet to check how deep is this market in terms of numbers. But I mean, do you believe that will stay alive after this 30% and a withholding of 10%?
We don't comment on the way products are made and products are utilized. So it's up to the person who is offering the product to decide.
Oh, that's fair. That's fair, Mr. Gupta. Many thanks for clarifying some of these ambiguities for us very patiently, and I do hope that some of them, which you have sort of discussed in this conversation with us, in due time, for the bill gets tabled, will get clarified in terms of language. Many thanks for joining us here on YouTube Prime, and thank you, viewers, so much for watching.
Thank you.